It's Sunday the 9th of December 2018. Gold had one of its best weeks in a few months this week and closed up around 1250 US on Friday night, up to a sort of a 5-month high there after it bottomed in sort of that late August period. Uh, Crucially, it sort of got above this 1240 level, which had posed a bit of resistance in late October. You can see here there was a bunch of sort of long wicks coming in there at 1240, and it struggled there on Wednesday and Thursday, but decisively broke through, it looks like, on Friday. So I'd like to see a little bit of consolidation and holding that 1240, but at the moment it looks positive. I think the US stock market's had a very bad week, and I'll get to that in a bit more detail. But also the rate of Fed increases is really starting to change, and the sentiment toward interest rate increases is changing to the point now where there's even some doubts that they'll raise in December, which is the decision it's due in about 2 weeks. I think in the last video I pointed out that that US stock market, if that starts falling hard, that's really going to test the Fed's mettle here, and I think they're really starting to buckle with the stock market falling, and also with comments from Trump and a lot of others trying to stop rate increases. I saw a couple of charts on this Bloomberg article, and this one here is actually talking about rate hikes in 2019, and now it's implied that they're only expecting about less than one rate increase, less than 0.25%, I guess, on a cumulative basis. Now, the other thing is that the odds on a rate hike in December have fallen heavily as well, to the point now where it's only about a 60% probability based on sort of trading. I think it's on swaps, index swaps there, and that's typically when those odds have fallen below sort of 80 or 90% in the past. I know a lot of the time when Janet Yellen was the Fed chair, they would buckle and not raise rates. So if you start to see some more in the next 2 weeks, if we see some big down days, I think that probability will go lower, and I think the Fed might even buckle and not raise in December, let alone do anything next year. And the data's starting to look a bit weak as well. So those things are positive for gold, and I think that's what's the last couple of days. It's dawned on the market that is a possibility, that December rate increase is not even possible. So if you look at, I think that's why I focus on the S&P 500 chart, because ultimately that's the one that everyone looks at, and what will drive that attitude toward interest rate increases, which will in turn should feed into the gold price. And you saw here that very bearish action on Tuesday and on Friday, with that there was a day off in between there for the funeral of George Bush, so it tried to bounce a bit on Thursday, but then completely engulfed lower and closing at a new low for this sort of move, or close to a new low, matching that low a few weeks ago. And we're seeing this sort of bear flag action here that's been playing out now for almost 2 months. And I think this is going to resolve soon, and it looks like it's going to be to the downside. So I think if we break through this 2600 level, I think there's going to be considerable momentum for a move quite a lot lower. So if that happened in the next week or two, and I have seen some articles this weekend sort of suggesting that these are the market looks primed for a crash type scenario on Monday. I don't necessarily believe that, but there is a lot of weakness in this market at the moment. I think seeing moves of these ranges of like 2 or 3% in a day. This is very volatile and looks like wants to break a lot lower. So I think if that happens, you'll probably see the Fed buckle in on the December hike, and then that would feed, I would assume, would feed positively into the gold price, because I don't think it's only been in the last 2 weeks that probability of the December hike has really sort of dropped. It was up to sort of more than 90% expected that the December hike to be sort of baked into the market. So it's now coming off, and I think that would do well for gold. As I said in the last video, S&P 500 has broken through a lot of crucial support lines here, tried to reclaim them, as you would expect, failed again at this trend line, failed at the 200-day moving average. So there's nothing in here that suggests that this this market is bouncing. I know everyone sort of wants it to bounce, and I think I saw another good chart this week, and this is talking about the buy the dip kind of strategy. So average daily S&P 500 return if the previous week return was negative, and you can see for the last 10 years or more than 10 years that strategy has worked, and then it hasn't. This year has been the first year since 2005 where that strategy is negatively yielding. So I think, and you can see obviously that the previous periods have coincided with recessionary type environments or weak markets, bear markets anyway. So I think this clearly is a change in market sentiment. This is not a buy the dip. This is a fundamental change in sentiment here, and I think this is, the US stock market is generally a leading indicator of the broad economy as well. So I think the broad economy, saw the payrolls numbers on Friday were weaker than expected, and I think they'll gradually get weaker, and that's the leading indicators of interest rate sensitive sectors of the economy have been weak for a while now, but people have sort of decided not to pay attention, even though they're understood to be leading indicators. They're sort of dismissed. But anyway, I think that's feeding into a pretty bearish sort of setup here, and that if it breaks through 2600 decisively, I see considerable downside in the next month, unless the Fed can come in and drop interest rating, drop that, go on a pause on interest rate hikes and soothe the market a little bit. And they've already started doing that in the last couple of days. They've said some soothing words, and that's actually what caused that bounce on Thursday. There was sort of a leaked article into the Wall Street Journal. So I think one of the other interesting ones I talked about in the previous video, which is 7 or 8 weeks ago, was Apple, and it was actually trading, I think it was about here when I mentioned it. So it was before this move where it really cracked lower. I think the last video I published was on the 28th of October, and I mentioned that earnings report that they were coming out with in that week, and that was this gap here where it really plummeted. And since then, it's been one way, and it's a considerable downside. It's gone down almost 30%, I think, in the space of 2 months now. So that's a big move. Maybe not 30, getting close to 30%, maybe 25%. So it's erased all gains for the year now. And I thought a crack in the US market would coincide with a crack in Apple, and I talked about all those other stocks in the previous videos, Amazon and Google and these sort of companies. Apple and Google were kind of the last man standing, I said in the last video. So Apple's cracked lower, and that's coincided with a new sort of move lower in the US market. It's amazing how quickly the sentiment can change, because it's been known for a while that iPhone sales will get likely to struggle to move higher, especially with massive price increases. But I think everyone's sort of Apple stock was still sort of levitating there, and now it's sort of just dawned on the market all at once that perhaps the strength isn't there. But I think Apple's still a profitable company as opposed to some of these other tech names. So maybe it going to find some support relatively soon. There's sort of a bit of a fair few sort of support levels in this area, sort of between 150 and 170, you'd say that's reasonably well supported there. But stock keeps moving lower. So one of the other interesting things this week was the Australian dollar was extremely weak. If I can just get it up here. There it is. And that came after some comments on Wednesday. I think there was the GDP number came out on Wednesday, I think, as well, or Thursday, and was very weak. And it's sort of indicating, I think, that the housing market weakness might be feeding into the broader economy now. And this is something that I've been focusing on a lot. And I think ultimately that's going to feed into a lower currency and sort of might infect the broader economy. So, and then there were some comments on Wednesday evening from the deputy Reserve Bank governor, talking about possibility to cut interest rates again in a downturn and to do quantitative easing, which to me is just madness. And this is the sort of stuff that you don't you you can always sort of see it coming, and a lot of these reserve banks, central banks around the world, kind of follow the same playbook. And because the US quantitative easing was supposedly successful, despite the fact that it hasn't been unwound, it's been declared successful, and now the Australian central bank will follow if it's required. The difference is that Australian dollar is not a reserve currency, and I think would fall through the floor in that scenario. 50 cents potentially, which is why I've been recommending Australian gold stocks for a long time, because I think they'll continue to do well in that environment. But you saw here that was very bearish, all 5 days down this week, and I think that little mini burst it's had, probably since I posted the last video actually, it had a nice run, and sort of that. So I think some of that old data that's sort of been driving GDP numbers and employment is now gradually fleeing, and it's the new data that's relating to house prices and credit sensitive instruments to the economy. I think that's going to drive the Australian dollar lower. So I still have a bias for a falling currency, and this week obviously, with US gold doing very well, that had a very big effect on the Australian gold price, because you saw that decoupling that I've talked about, where the Australian currency starts to trade on its own fundamentals and not just being a proxy for China growth or for just the anti-US dollar. So it's traded significantly lower, and that's caused the Australian gold price to go up, $70 in the space of a week or two. And it's that really sort of impulsive move, and it's trying to reclaim that trend line that I've been talking about for the last 3 years. So looking very positive there, and I think 1750s or 1760s sort of been a key resistance level for the last couple of years. So if it was able to break through there, you can. I've talked about $2,000 Australian gold, and when you see comments like that from the Reserve Bank governor, or the Deputy Reserve Bank governor, about quantitative easing, in that environment, you could see the Australian dollar gold price go a lot higher than 2,000. Now I guess that's sort of a crisis scenario, but the setup in the housing market is very weak at the moment. I don't discount that, and I think a lot of people sort of forget how possible that is. But anyway, that's sort of the longer term. I still think this is going a lot higher, and that's why I like to play those Australian dollar gold names. The local share market, the local Australian share market, I'll just touch on that briefly. Being very weak. Last video I pointed out this possibility of a move toward this longer term trend line, which would be around that sort of 5,300 level. And I think that's still my prediction. Potentially by, in the next 6 weeks, that's possible. We usually get that sort of Santa rally going into Christmas, but there's no indications on the US market or the Australian market that there's going to get a Santa rally, unless you can start to see some, the Federal Reserve come in and save the day. So that level's only about another 6 or 7%. Maybe it represents a reasonable buying opportunity there. I don't know. I'm not exposed to the broader market, but it's sitting on key support level there that it's been sort of since 2017. That 5,600 level's kind of been a bit of a line in the sand. So looks very weak though, and looks like it wants to break lower. I think where Australian market had fallen further, perhaps than it should, with the US market weakness, and now it's probably not as it's holding better than the US market at this point. But typically, if the US market really falls hard, the Australian market falls just as hard. So even if the fundamentals of the Australian market aren't as overdone, the valuations aren't as stretched. But I still expect that to go lower, and if it gets to that 5,300 level, I'd probably reassess there and see what the broader markets are doing. But all in all, I think it's been a kind of an important week for the gold price, particularly with that change in sentiment about interest rates, which will be, almost always is the primary driver for gold. But you're starting to see signs of weakness in the US economy, signs of weakness in the Australian economy. And that's, I think gold had been in this phase for the last few weeks where it had been ignoring that, and not really being a safe haven. But with that, safe haven in the sense that it was holding, but it wasn't reacting strongly and anticipating that the Fed might change interest rate policy, for example. But the last week has seen that starting to be factored into the market, and a nice rise there toward 1250. So I'm hoping it can come back toward this trend line again, in sort of, by January sort of thing. I think is a fair time horizon. But if you start to see that, if that December rate hike doesn't go through, I think that could be quite positive for gold. And hopefully that feeds into some of the stocks which aren't getting the bid necessarily that they should. So all in all, I think it's a pretty good week for gold and a good time to keep an interest in it.